Thank you for joining us, everyone. We are delighted to be here to share our thoughts and perspectives on SME lending across the continents. And I'm delighted to have my esteemed panelists here. We will quickly do introductions. Each of my panelists will give their name, position, company, and then also the country in which they operate, or countries, and then something about the company in terms of assets under management or their specialty. So we'll kick it off. My name is Bo Brustkern. I'm the CEO and co-founder of LendItFintech. We are one of the world's largest fintech events organizers, and we have events in China, in North America, and in Europe every year. And special thanks to Laurent for inviting me to participate. Please go ahead. Oh, and don't forget the mic. Yeah.
That's very polite. Chivalry's not dead. Hello, everyone. My name is Llewellyn. I'm the co-founder and president, wish I was the chairman, I'm not, of Ovamba Solutions. It's one of the very few fintech platforms for the African market. In simple terms, we're an asset-backed lending alternative to banks. But we also have a number of activities that are blended into that mission, one being financial inclusion, and also the selling of commodities on behalf of farmers. Everything is done through technology enablement. The company is about 5 years old and was founded by myself and Marvin Cole, my business partner. We are a US-based company with African operations in Cameroon, Douala specifically, and Côte d'Ivoire, Ivory Coast otherwise known. We have our technology built between Cameroon and India. We have a fund structure in the Mauritius, and we have offices in Joburg as well. We raise capital from institutional investors, and we fund small and medium enterprises with short-term capital to buy inventory and commodities to help them to grow. Up until this point, we have originated somewhere around about maybe 120, 130 million euro in deal flow. We have funded and dispersed approximately 20 to 21 million to small and medium enterprises. We have done that off capital that has rotated very rapidly in the quant of somewhere around about 9 million. So we raise capital for both debt and for equity, and our default rate could be classed as a little less than 4%, considering that all of the funding or lending on the platform is fully secured and collateralized to the tune of about 210%. So if a customer doesn't pay us back, we liquidate their goods because we own the asset from the very beginning of the transaction until the very end. I think that's about right.
My name is Christian. I'm a partner with Earlybird Venture Capital. We are the largest German-based venture fund, 850 million under management in total. Fintech, insurance tech is one of our focus areas. We have 11 or 12 companies now in our portfolio in these sectors. We, as the name indicates, invest in early stage. We do some seed. We invest in Europe, in Western Europe, and Eastern Europe. We do, as said, we start with seed, but the sweet spot is early stage, and we're looking to invest in companies which can basically become global. It depends a bit on legislation, but our aspiration is to bring companies to the US sooner or later if there's a potential to grow in the US.
Hello there, I'm J.Woloszczak. I'm the CEO and founder of Spotcap. Spotcap is an innovative own balance sheet lender headquartered in Berlin. We are operating since 2014 in 5 countries, 3 in Europe, Spain, Netherlands, and the UK, and also Asia Pacific, which is Australia, New Zealand. We have around about 120 people employed, where half of that sits in Berlin, which is our research center and obviously central headquarter, and the remaining people in the local countries focusing on commercial partnerships and origination. As of today, we have roughly issued close to 200 million in credit lines and secured around 30 million in equity. I have invested quite a lot of this amount also in building a great full-service lending platform, which we are more and more leveraging also in terms of some white label partnerships with larger corporates or banks, such as recently announced with the BAWAG group in the German-speaking markets. And yeah, looking forward to the discussion today.
Hi, good afternoon. My name is Chris. I'm the CEO and founder of Iwoca. We have a very, very simple task. We want to make it as simple for a small business to access financing as it is for someone to book a flight ticket from London to New York. And that's easier said than done. But we have come a long way over the last 6 years, and we are able to do this in a fully automated way within minutes of an application. We have funded close to €500 million to more than 15,000 customers to date and operate in the UK, Germany, and Poland.
Hello, my name is Marko Rant. I'm the co-founder and CEO of the Invoice exchange, a fintech startup based in Slovenia, operating in the online factoring area. So our business model is a marketplace. We're not a balance sheet lender. We have a platform connecting SMEs who have invoices outstanding to their clients and investors who are willing to fund against those invoices. So it's asset-based funding. Operating for 2 years, funded around €20 million worth of invoices to date.
Great, thank you very much for the introductions. So we'll start off with a debate that's has been banted about for years on all continents, and that is sort of what are the advantages and disadvantages of balance sheet lending versus marketplace lending. And so to kick it off, maybe we'll take it from the balance sheet side first. And Jens and Chris, maybe you can both opine on that, and then we'll hand it over to the marketplace guys to give their side.
So if you think back to what I just said, our mission is to make the process as simple as possible, and we are operating in a space that has been neglected and not served by banks for a very, very long time. So the really critical bit for us was to solve the borrower experience, and as a big part of that, the understanding of the risk of a micro and small business. And for that reason, we were very fortunate to have venture equity investors as well as debt financing institutions, both credit funds and then banks, who were able to give us funding so that we could pioneer in that segment. So I think from our mission, we were much more driven towards a balance sheet model, which enabled us to concentrate much more on the borrower experience and the IP and credit scoring. I think going forward, the funding really is just a commodity and output of whatever financing model that you use. And I don't see any reason why we wouldn't be selling parts of our origination that may not fit our own balance sheet requirements. So I think in the future, it's going to be a much more fluid and hybrid model. And you will not necessarily have the discussion, are you a balance sheet lender or not?
Yeah, I do actually fully agree here that those models are kind of converging to a certain extent, while peer-to-peer also had obviously the retail component, which helped, I think also, especially in the earlier days, quite well to create awareness in the market, because it's basically an asset class, which for balance sheet lenders, it's more about serving SMEs and their funding needs, which is obviously something the marketplace lenders do also take care of. But in the end, our focus was in terms of dealing with the clients and the partners. We have quite a lot of distribution partnerships which we work with, and those actually require the highest flexibility and convenience for the clients, which I think we can do to the very best, also compared to maybe certain peer-to-peer players. However, also when it comes to the investors on the refinancing side, I think as an own balance sheet lender, you have certain skin in the game in terms of you take the first loss piece in case things do not go well, which is particularly important, I think, once we might see kind of a bit of a recession or a downturn, where obviously then that is more critical than by just being intermediary and originate loans with an expected return to investors, but actually really having the need to deliver that net revenue margin for your own business to be successful. And that's something which drives us from, or did drive us from the very first days. And yeah.
Marco, you have been focused on making a very fluid marketplace. Can you tell us about the advantages there?
Yes. So the way we perceive things, and I respectfully disagree on a couple of issues. In terms of balance sheet lenders, it is, in my opinion, easier to focus your user experience around the recipient of funds, because if you control the funds, it's much more easier to to seamlessly do that. Whereas with the marketplace environment, you always have investors on the other side who are taking the risk. So how do you streamline that process? And that's been a particular issue that we've been trying to hack at the Invoice exchange. And I think the benefits of a marketplace really is the potential for scalability. I mean, in a balance sheet position, the question is, to what extent can you really grow your balance sheet to make a really big play? Because invoice finance or SME finance, it's a billion euro or $1 billion industry. So will your partners take your counterparty risk above a certain extent? Whereas with a marketplace model, if you can standardize and fragmentize risk and disperse it among a number of investors, you have, in our opinion, you have a much larger scaling potential. So that is the approach that we're taking.